Hey guys, welcome back to Lunar Beaches Crypto, where we ride the waves of the crypto market all the way to the moon. In this video, I'm going to be going over a few indicators that you can use to help you in identifying market structure and zones of liquidity. And then maybe you can go over and watch my last video that I posted about how to identify a shift in market structure, and then come back over and watch this video. But I will still give a little bit of that in this video, so let's just go ahead and get into it. So just wanted to give you guys, a few of the indicators that I use on a daily basis that just kind of help me in identifying the market in a quick way, because I have a day job. I've got to be able to look at the charts at a specific time and see if there's something going on that I'm looking for. Has a high time frame high been taken out, high or low? Have we taken out Asia session highs, London session highs, all that good stuff. So here's a few indicators that I use that'll that kind of help assist in all of that. Now you can draw I think pretty much every single bit of this out yourself. But yeah, let's just go ahead and get into it. So let's start with this one right here. This one's called Spaceman BTC. That's all one word. Key levels. So I'm going to turn that on. And what this one does is that it gives you all different sorts of things. Let's go ahead and go into the settings. So in this one, we have display style, which is standard, and then you have right anchored, which just shifts all the labeling over to the right like this. Kind of clear, helps, kind of gives you some more room on the chart. So we also have other stuff in here. So we've got distance, we've got text size. If I do global shorthand, it's going to shorten all of these up into just like little acronyms. So you got your previous month high, your quarterly open, your previous week high, all that good stuff. And these are just key levels that we want to be paying attention to. So if we cross one of them, we can be looking for those reversals or possibly continuations. But yeah, it just helps you quickly identify all of those. It does also have your sessions right. Where'd it go? It has your sessions on. I thought it had your sessions on here. I thought I just read sessions. Maybe not. 4-hour daily, previous. So you can add all kinds of different things on here. Previous daily high. You can do your previous daily midpoint. These are levels that, of course you want to see some kind of confluence. You want to be able to understand market structure. So before you even go into all of these levels, because you want to know what you're looking for when you're going into these levels. If we're moving to the upside, so the whole purpose of learning all of this, this is kind of like almost an anti-momentum strategy, where you're kind of looking for the reversal, more than a continuation. So when you're coming up or down to levels, you're looking for, the market structure shift that I shared in the last video that I posted. So Spaceman, there it is right there. You have your previous daily highs, your previous daily midpoint, previous daily low, previous week low. All of these levels are key levels that, if taken out, can result in some type of other price action. So let's go ahead and move on to the next one. This one's called ICT Kill Zones, Sessions, and Indices. This is by Vince FX BT. And then all this one does, it won't go above the hour, but if I go down to the 5-minute, you can see it gives you your Asian session. Your full session is the solid bars, and the kill zones, quote unquote, what are called kill zones, are in the dashed boxes. And you can customize this 3 ways from Sunday as well. You can hide all the sessions and just have your kill zones. You can include the weekends or take out the weekends. You can even change the times. You can shorten them up to your own, desire. You can add a New York Open, an 8:30 a.m., an 8:30 open, a 9:30 open, the PM session, your last hour. You can do 90-minute cycles where it'll literally put up 90 minutes. Every 90 minutes, there's a line. So there's a theory out there that every 90 minutes has like a different type of structure to it, something that you're looking for. This isn't the video for that, but that's maybe something that might interest you if you're looking into that type of stuff. 90-minute cycles, time zone, show day separators, show day labels, all that good stuff. So, yeah, ICT kill zone sessions and indices. One of my personal favorites. But as you can see, like none of these, this isn't like an EMA or a MACD or an RSI or, anything else, any kind of oscillators, no volume. It's basically just going off of price action, understanding how price is being offered and or delivered, different levels that are being taken out, and what to look for, what signatures to look for within the lower time frames that you can make a play off of into other areas, pools of liquidity. So, yeah. So it's mostly just giving you labels of things, but this one is different. A little different. This one's called Fluid Trades SMC Lite. I'm going to turn this one on, and you're going to see why it's different. Bang! That's awesome. So what this one does is it just straight up takes all the highs and lows and just shows them to you. It just shows you the market structure. It just lines it all out for you. It's pretty cool stuff. You can see it, with this, it kind of, and it does the break of structures too, and your demand zones and your supply zones. And these are just point of interest. So these are levels where if it comes up and takes it out, either you have an alert set for that level, or you're just watching it, paying attention. These are levels where you would look for those reversals that could come back. Even if it's just a pullback, maybe you can make a play off of that. But anytime it comes down to the demand, look for that reversal. Comes up to the supply, look for that reversal. You can easily spot consolidation ranges, and then you have the push up, right? So, and then you have your pullback back down into creating this break of structure down here, but you also get to see the relatively equal lows. It's pretty plain as day to see. So there are several different ways to take advantage of these indicators, and I will be going over these in future videos and future live streams and stuff like that. But yeah, there was one more. I don't know why it's not on here. Because I was just using it. This other one is called TTF SMC Toolkit by the TRD Floor. Click on that. Let's get rid of the zigzags real quick so we can just see this one. Now I am going to reset the settings. All right. Didn't look like it changed anything. All right, so we have the internal dealing range, the dealing range on the outside. you have the midpoint of that range. So what this range is just the range from 9:30 a.m. to 10:30 a.m. So that's an hour there. I think they're all a little different. This one is from 3 to 3:30 for London. Asia, 19:30, 7:30 to 20:30. So that's an hour there. One of these was like an hour and a half. It's almost like it changes. So whatever it does, I mean, it's able to pick up these like consolidation ranges. It pushes up, and then you get that reversal down to the downside where these lows are your target. It shows you your midnight. You can do all kinds of stuff with this. DR range, you can do a Monday range, Tuesday range, Wednesday range. This is going to get really cluttered. You can go every single day of the week, and it'll give you your highs and lows of the dealing range for that week. Pretty cool. Now, I don't use it for any of that stuff. Just to be frank, I use it for the arrows on the candles. So if I drop down to the 1 minute, I can even get rid of this stuff if I wanted to, but let's just not worry about that right now. So drop down to the 1 minute. These arrows, kind of hard to see. These arrows at the top of the candles are showing highs and lows. So I try to find the internal ones and wait for them to get taken out. Okay. Look for a liquidity zone, fair value gap. And that is where I would go short from. And I would aim for lows. And then put my stop loss, there's the fair value gap, just above the first candle of the fair value gap. And that's a almost 3-to-1 trade, so it's not bad. It does keep going. So, if you just manage your risk properly, when this first high breaks, we can get rid of that stop loss, or first low rather. And then we can start trailing it once we move past here, these lows here. So, proper risk management. This is the 1 minute chart, so you might need to use a little bit more margin and leverage. But you've got to manage your risk properly. You can only, this is not financial advice. You can only take the trade that you think you should trade. So, never put in more money than you are willing to lose when you are trading. And know that it is a marathon and not a sprint. That's why I don't really scalp all that much, because, I've got to see all the conditions. I missed this trade today because I was at work. It is what it is. I I really wish I didn't miss this trade, because this was a banger. I mean, it was just so clean. So clean. But hey, that's just how the cookie crumbles sometimes. And there will be plenty more opportunities to make trades. But this is the end of this video. Oh, before I go, let's get back into this not this one, but the zigzag one. So the reason I keep calling it zigzags, because that's what it is called in here. Show zigzag. So show price action labels. So this will actually give you higher low. This will say give you chotch. It'll break of structure. So there's many different cool things that you can do with this. These, your break of structures are places where these lines have been broken. Change of character. I mean, you don't really need too much more than this, guys, especially what I've given you today. And then you can also customize every single one of them to that fits your needs, that fits your strategy, any kind of strategy you're looking for. Now, personally, for me, just looking at today's chart, I'll go over this real quick and then we'll wrap this up. But just looking at today's chart, what I saw was the obvious high and low, and then I saw the chopping about within the range. So when we crossed the 50, that is when I started to look for that shift in market structure. And we broke this high as well, so we're taking out the 50 and we're breaking this high and this high over here. So this is where I would look for a reversal if I was to play the reversal. So if I would have seen it, that's what I would have played. And that's why I would have played it. And all I needed was a Fibonacci and highs to be broken. And then looking for that market structure shift where we kind of have a consolidation range. I went over this in the video as well. Then you have the break to the upside, the run on liquidity, and then the pull back, breaking internal lows. Did we create a fair value gap in here? Yes, we did. So if we do create a fair value gap on that leg that broke the lows, then we want to play off of that fair value gap. That's the one we want to use. And then we just manage our risk after that. So yeah, that's going to be it for this one, guys. I hope you enjoyed it. Let me know what you think in the comment section down below. I'm trying to do more of these how-to videos. So just let me know what you think. You know, I'm doing these one-off, no edits. So yeah, hope you enjoy it, and I appreciate you all for joining me. If you are new here, please consider hitting that subscribe button, and also, guys, if you wouldn't mind hitting that like, it helps boost me in the YouTube algorithms. Friends, I enjoyed making this video for you. Let me know what you think, and until next time, ride the waves. Peace out.